So thanks everyone for attending. It's a great crew here. Everybody was here early and engaged. Yeah, thanks again. Perfect. Be good if you had two of these to give away. It would work out much better, huh? Yeah. Thanks again to Davidson for the invite and all you for attending. Don't take anything I say today as investment advice. Could lead you down the wrong path. Definitely put me in the wrong spot anyway. So here we go. Lots to cover. We're going to briefly talk about some market updates, talk about marijuana sector, cryptocurrency sector, the two hottest ones going right now from the venture perspective. And then a few housekeeping things about QSIPs, personal information forms, and RTOs on the venture side of things. And then I thought this year I'd also add in a little bit from the TSX side in case we have some TSX issuers in the house. Yeah, we'll go from there. So a wise person once said, if you mess with the bull, you get the horns. It looks like as a marketplace, everyone here is all horned up and we've got a good market going on right now. It's basically been about 474 days of consecutive trading as compared to a timeline present going back to 1990. So we're in a decent bull market. You can see some of the spikes in there, 266, 222, 120, 128. That's kind of when we fell off cliffs before into downturns. So it looks like we're really hovering around the 65 range and have been for a while. So it looks like there's actually strength to this bull market. And so here's fingers crossed we keep going on that space. There's lots of new listings coming in. So a good pipeline of filings that we're seeing on our end. So some of the stats that we're talking about and seeing over this is 2017 annual numbers. The number of issuers is holding steady, so about 1,650 issuers. That's not particularly exciting per se. However, since 2012, it's been in decline. So this is the first year where it's actually gone up just slightly. The new listing activity is strong. We did 11 IPOs on the venture last year as compared to 1 the year before. Financing activity is up 38% year over year. And the inventory of shell vehicles is being consumed. So there's actually a return for a demand for CPCs. It's getting ever more demand in the last 2 months. Lots of groups that used to do CPCs that haven't for a while are now coming in with 2 CPCs at the same time. Just in this month alone, already we've received 6. Generally, like 2 years ago, we had 15 all year. So we had 38 last year as compared to 18 the 17 year before. And then in terms of qualifying transactions and reverse takeovers in aggregate between the two groups there, we've had 61 last year versus 48. That's kind of drying up some of the inventory out there. And then financing, the financings are actually going to businesses. It's not like a couple years ago where it was financings for G&A just to stay alive. It's actually recording funding the actual business with the average financing size going up to $4.1 million. The new listings that we saw last year were predominantly Canada-based. So of 140 new listings, there were 10 from international markets. There was about 6 from the US and 4 from foreign shores. And the overall market cap across the exchange is also up 33% year over year as well. So that was the venture, some highlights there. In terms of TSX, the main dotted lines just to draw your attention to. On the senior board, great year for listing last year. We had 153 new listings versus 117, so up 30% for new listings there. A really impressive one was they had 17 IPOs, and they were large IPOs that completed as compared to 3 the year before. And they also had 4 qualifying acquisitions complete. So qualifying acquisition is like a qualifying transaction on venture. It's just on steroids. So it had between 50 million and 100 million in the bank to do a deal. Versus the year before there was 0. So lots of new listing transactions going on the TSX end of things. The challenge is there though is that with the low interest rate situation out there right now, senior issuers have better access to debt, so they have alternatives to dilutive financings. And so the financing side through the TSX side was down about 16% last year, so 48 billion last year versus 57 billion the year before. So in terms of mining, obviously it's been our largest sector, but we have other sectors that are going as well. Mining represents 60% of our listed issuers and about 53% of all the financing activity that's done on the exchange. And that, I would say it's kind of a passing of the torch as well in terms of all the crypto mining that's firing up and looking to get listed on the exchange as well. So I think we're going to probably have to revisit our definition of mining, because we're going to have two probably pretty good asset classes pretty soon. Life sciences, they were quite active last year as well. They only account for 6% of the issuers. However, they accounted for 10% of the financing activity. So a lot of demand there. Obviously, marijuana led that in early 2017. And next slide, I'll get it to a little bit more there as well. In terms of the pipeline for new listings and financings, really, blockchain-related companies closed 2017 strong, and we're getting more and more appetite for a diverse type of blockchain listed issuers as well. We'll cover that in a bit. And then also, just so you know, for the group here, you know, Vancouver market, BC stakeholders, 40% of all the national market cap is comprised of our BC issuers, and 50% of the issuers in terms of number of issuers. So there's lots there. I just wanted to cover a couple quick things. In terms of the type of financing that we see getting done on the venture, no surprise, it's a lot of private placement financing activity. Makes up 70% of all the financings done on the venture. Top 10 financings done in December, to give you a sort of a flavor for what's happening recently. They range between $12 and $98 million. 3 life science companies were in there. So there's, with the California notice that they're legalized recreational down there's a big pickup there as well. So some of our issuers took some money off the table and financed. Year over year, or sorry, throughout the year, there was the top 10 financings were 80 million to 200 million individually, and it was predominantly mining, oil and gas, and real estate. So that's kind of those mining, oil and gas, and real estate sectors that are historically been pretty strong for us, but the move is definitely towards the cannabis and blockchain space right now. So marijuana has been talked about for a couple of years now, and towards the there was a lot of discussion going on in the industry, so we decided to roll up a joint staff notice and issue a TSX and TSX Venture confirmation of the market that basically, since in the US it's marijuana is a Schedule 1 regulated drug, it's actually higher rated than cocaine. Cocaine's only Schedule 2. So yeah, it's pretty surprising. We basically put out a notice saying, look, the business that you conduct needs to be legal in order to list with us. Having a session pull the Cole memo earlier in January doesn't, sort of further emphasizes the fact that it's a risky sector to be in. So what are we really concerned about as an exchange? Basically, what we are most concerned about is if an issuer's business touches the actual leaf. If you're growing, if it's actually touching the leaf, we can't list that type of business. Then there's also the ancillary businesses. So the third and fourth bullet points there. Something like that could be, say, a marketing company or a fertilizer company. They're not actually growing anything, they're just selling to the end user. If those type of issuers are actually selling predominantly to the cannabis space, particularly in the US, we can't list that type of enterprise. If it's selling fertilizer or marketing services to cannabis companies in Canada, then we can list that type of business. What we're concerned about is the materiality of the US revenue coming from grow-ops in the States in terms of the legality of that business. And so obviously that's something that we can discuss if you guys are interested in listing with that business, but just because you're providing services to the marijuana space, happy to list any sort of Canadian regulated marijuana issuer that's compliant with Canada laws. The concern around the US activities obviously is anti-money laundering and proceeds of crime. So we need to make sure that that's not happening on our facilities. So when we put out our notice, we also conducted a continued listing review of our issuers that were in the marijuana space. So on the venture side of things, that was looking at 23 issuers that were involved in the space. Some were growing, some were purely providing ancillary services to the space. Had discussions with them, ranked, determined to see where they're at in terms of US operations. Very happy to say that there's a very minimal risk to our venture issuers operating in that space at this point in time. They're all aware of the issue, and quite frankly, a lot of the CEOs at those issuers said, thank you for issuing that notice. You just gave me some job security. I've been dealing with shareholders for a year and a half, 2 years, saying, why the heck aren't you in the States tapping that market? And they can now point to the fact that, you know, one, we don't allow it on our issuers, and two, it still is illegal down in the States. So again, just to reiterate, we are open for business for the medical space in Canada. We do have issuers that are listed in Canada and operations in Australia, Germany, Israel, Uruguay that have medical marijuana business that are listed. Happy to work in those jurisdictions. When recreational comes in July, I'm sure I'll be happy to do that business as well. Pretty much what we need in terms of if you're thinking of doing medical or and in July recreational marijuana around the world, we'll need to make sure that it's legal in the jurisdiction you're operating in, plus legal in Canada. And with that being said, if you're getting into a new jurisdiction that we don't currently have issuers listed with business in that space, we'll need some sort of framework analysis to say, okay, notwithstanding you're operating in foreign country A, what are the rules and requirements around that? Is there some sort of meaningful oversight in that jurisdiction, similar to Canada's oversight for that business? So switching gears slightly, economy's switching basically from at least from my perspective, from a natural resource based economy in Canada to more of a human resource based economy. If you look at the market caps up here, back in 2008, 480 billion of market cap was natural resource based as compared to 1,300 billion, and then fast forward to 2017, 584 in market cap for natural resources versus almost 3 billion, or sorry, 3 trillion, I guess, in market cap. So what's that looking like? 40% of the natural resources comprise 40% of the business to start, and now it's dwindling down to 20%. So where's it all going to? Well, there's a growing importance of tech in Canada. It's been our #1 sector for new listings over the last 3 years, from 15 to 17. Overall, those 93 issuers have listed, and they've raised an aggregate of $21 billion in those 3 years. So just to put up a timeline here in terms of where the world's going globally, it's very similar in terms of back in 2001, if you were to look at the top 5 market caps of listed issuers, the black is basically any other industry and green is technology. It was Microsoft was there in 2001, everything else you had Exxon, Citi, Walmart, GE. And you fast forward to 2016 and it was all top 5 were technology-based companies. So you had your Apple, Alphabet, Microsoft, Amazon, Facebook. And I think it's just a trend that we're going to continue to see. So sometimes we get questions about the technology space and VC funding and whatnot. So we did some analysis, and this is basically what we had learned here. So on the left-hand side, you get some traditional VC companies. Those were basically 1,100 issuers that are based in the States, technology, and they raised seed capital between 2008 and 2010. On the right, you have public venture capital, 97 companies that I previously talked about. Sorry, not the same companies, different companies. On the venture, though, between 2009 and 2013. And so some of the key takeaways there are that, you know, if you're looking to raise multiple rounds of financing, it was actually done a lot more on the venture side of things, on a publicly listed capital. If you look at the sort of access to funding box there, you know, 54% failed to raise follow-on funding if you went the VC route. If you go public company, 5% failed to raise follow-on funding, and then it sort of breaks it down from there. In terms of if you're looking for an early exit, the VC funding issuers had more early exits. They exited 28% of the time versus 13% on the venture capital side of things. But in both cases, basically 1% of them reached unicorn status. So the likelihood of reaching unicorn was the same between either side. So having said that, how can you take advantage of the technology marketplace and the strong demand out there right now for these types of issuers? One of the way, obviously, is cryptocurrency. CSA put a staff notice out, 46307. I won't go too far into it, but basically, if you're issuing some sort of crypto currency, or if it's a security, you need a prospectus to be filed in order to trade that, or some sort of exemption from that prospectus. If you're looking at getting into a cryptocurrency business that is basically in the business of trading cryptocurrencies, then you either need to be registered as a trading firm or exempted from that as well. And then if you're looking to run a cryptocurrency exchange, you may need to be approved as a marketplace by the CSA as well. So keep those things in mind when I'm getting approached for pre-file meetings as to what types of businesses you need to run, or qualifications you need to have to get listed. That's definitely one thing I talk about and point them to Carla Marie's counterparts to determine whether they need registration from a CSA jurisdiction. In terms of what the exchange requires, we need legal opinions and a framework analysis as to what types of business you're going to be conducting and whether it's legal in the jurisdiction that you're operating in and in Canada. So we have a strong demand of new listings in the space, as I had said, but we're open to list all types of blockchain cryptocurrency type activities. For those that we haven't listed before, the due diligence process will be more elongated than the ones that we already have. So having said that, we have at least 2 mining companies up and running. We have one company that's a master node company. It's not mining, but it's providing validation to mining type issuers. We have an investment issuer that's pretty close to getting across the line. We've got a server farm that leases out space in their server bank for other people to mine that type of stuff. We also have a couple issuers that are using crypto, white labeling crypto software to other users, and then a couple sort of cybersecurity type crypto-based issuers that are applying as well. Generally, we've listed 3 of those companies fairly recently, all between December and January. 2 of them have taken 4 weeks. 1 of them took 5 weeks after getting a comprehensive disclosure document. So key question is, that's great, Andy, I'd love to list with you, but there's other alternatives out there. How quick can you get it done and what's it going to cost me? So in terms of timeline, you're looking for between 4 to 6 weeks is what we're turning them around in. As an exchange, we're using other offices across the country to facilitate file reviews. So if we have a pent-up demand here, which we currently have a strong demand, but we're handling it, but there are release valves to get files reviewed in other jurisdictions, so Calgary, Montreal, Toronto. I know in December I farmed out 3 to Montreal just because everybody wanted to get a deal done by December 31st. They all got turned around in 4 weeks and across the line and listed, so some happy customers there. So happy to have discussions with you after about any sort of transactions you may have. So just keeping in the tech space, I just wanted to share a few different examples. TO Networks, I'm sure most of you have heard of this one by now. If you haven't, it went public back in 1999. Hamid Shabazi took it just fresh out of university, raised $1 million to go public, had revenues of about $1 million. Technology didn't quite work out. Then it took the next 15 years, pivoted about 6 times. Finally found a technology they thought they could work with, scale it up. They used, they ended up getting to generating revenues over $85 million. They financed over several rounds, over $30 million. And then they used their share capital to grow and acquire entities larger than them. It eventually led to a takeout last year for $300 million by PayPal. So all I really want to communicate by that is being public. They managed to survive as a public vehicle. If it was VC, they probably would have had a bullet put on them a long time ago. BTL Group, that's a blockchain group that we listed. It listed via our CPC program, qualifying transaction route. They went public with a $2 million financing, revenues of 0. They've since done over $15 million in follow-on financings, and they won our Venture 50 award last year, and they now have a market cap over $140 million. In fact, today when I checked, it was $240 million. So a lot of interest in that space. Another one we listed was Hive Blockchain. That was in December, and Basically, that one we listed in about 4 weeks after we got the disclosure document. It had a $17 million go public at 30 cents. And then it was revenue generating day one. And since September, it's raised over $150 million in bought deals with no warrants. So there's strong demand for this space. And then other private placements as well. And it's currently, it's got a market cap in and around the 875 million range. So that's the kind of crypto space covered. And then some housekeeping items for QSIPs and ISIN numbers. I just want to point out for the issuers in the room, if you're thinking of doing a stock split or a consolidation or a name change, you need to get a new QSIP or an ISIN number. And there's one to actually get a confirmation from CDS about these numbers. It's two to make them eligible. It's similar to buying and installing software. You need to provide the install key after you buy the software to make it fully activated. If you don't get it eligible and it wants to trade or be affected in short term, CDS is charging an expedited fee to make that happen, and it's quite expensive. So I would highly recommend talk to your advisors if you're considering a split, consolidation, name change for any sort of new QSIP, to make sure you follow up to make sure that QSIP's eligible earlier in the timeline as opposed to later. Basically at least 3 to 5 days before you need it affected. Personal information forms. So this one is a project we've been working on for a while. I think last year I was here, I talked about PIS, we're gonna automate it, update it, and it's gonna be great. And I think I said that the year before that too. So finally, this December, we managed to get it across the line, early Christmas present for hopefully the marketplace, or it's perceived to be that way. What does it do? It went live in December. We've had over 150 PIFs or 2C1 stat decks filed online already. It allows you to save your PIF online. It's a smart form, so if you fill in a few fields and for whatever reason you miss a couple, it'll prompt you to fill those before you actually submit it. Hopefully that mitigates on the old, okay, well I completed most of this, wasn't sure about that, left it blank, send it in, just to turn around, send it back to you guys to have it completed and blah, blah, blah. I don't need to tell you about the headache. I'm trying to say we're great to do business with. So anyway, the PIF has been automated, smart form. It eliminates notarization. So you don't need to, if you have issuers or board of directors in Europe or foreign countries, you do not need to send them to notarization. I hear it was quite difficult to get notaries in different jurisdictions, so it eliminates that process. It also allows for electronic signatures, so no more wedding signatures. You can complete these from the beach in Hawaii when you're on vacation. You had nothing better to do there. So, and then you just file it online. The link for that is on the screen there, and if that one doesn't work, there's the direct route below it. Policy 5.2, just wanted to quickly mention for issuers thinking about doing changes as a business or reverse takeovers, you can speed up the timeline by not requiring shareholder approval as long as you meet the criteria that it's an arm's length acquisition. The public vehicle you're putting it into is basically inactive, which means it's either on Next, can be on tier 1, tier 2, as long as it's been inactive, doesn't really have an active business going, and that it's in good standing. You meet those requirements, likely qualify for an exemption of shareholder approval. So hopefully that saves some time to get your transaction to market. Okay, putting on a TSX hat here quickly. When you're filing private placements or financings for TSX issuers, you need to file a Form 11, and it needs to disclose information about private placements, specifically any sort of pending transactions you're aware of. So mergers, acquisitions, takeover bids, significant transactions, or dissident shareholders. And then you need to file an officer certificate confirming basically that disclosure. Reason for that reminder that was put out in November, there was the Echo Oro decision where a dissident shareholder group appealed to the commissions to have a private placement overturned. They were successful. And so it's a reminder that in that particular case, there was no notice in the form and wasn't readily apparent. So just make sure if you're filing financings to disclose any sort of pending transactions you may be aware of. Next up, website disclosure for TSX issuers. Basically, in May 2016, we published a notice and a reminder, and it became effective in April, that should say 2017. And basically for advance notice policies, majority voting documents, any special committee charters need to be listed or posted to the company's website. And the reason is, while they are on CDAR, they're difficult to find. And so it was determined to make it, to aggregate it in one place on the website to make it easier for shareholders to find that information. And then for security-based composition, it's a fairly higher volume filing for TSX staff. One of the changes that was made was that the annual burn rate disclosure has a specific formula, and it's based on weighted average number of securities. That needs also to be disclosed, as well as any sort of stock-based award. So options, deferred share units, restricted share units, profit sharing units, any type of share-based comp. You need to disclose the max number of awards, the awards outstanding, and those available to grant. Not you, Grant. Sorry, buddy. And then we have last bit, change the manual for dividends and distributions. The Form 5 was updated, so just make sure you use the new form when you're using that one. And that's it.